Hi, I'm Christine Benz. I'm live at the Money Show in San Francisco. Thrilled to be joined today by Janet Brown. She is the CEO of Fundex Investment Group, where they manage a newsletter, they manage mutual funds, they do investment advisory. I want to talk to Janet today. Janet, welcome, first of all.
Thank you very much, Christine.
I want to talk to you about sustainable investing. You have a sustainable mutual fund. Let's first talk about what that is, because in the old days, when I first came up as an analyst, we called that socially responsible investing. It's a bit different, but sort of the same idea that you can
It's
invest.
evolved.
Yes.
It's certainly evolved. When I started doing socially responsible investing 20 years ago, there were just a handful of funds. They were mostly large cap growth. They were mostly exclusionary.
So screening out tobacco
Exactly.
and defense makers and so forth. So how is it different today?
Well, it's different. Number one, there's just an explosion of interest and growth in the industry. I think primarily because people have now learned that they do not need to give up performance. I think that's the big thing. And as
So to have a sustainably oriented portfolio, you might think, well, if I'm excluding certain companies, I'm doing certain things to focus on sustainability, that might come at the expense of performance. But you say when you look at the data, that's not the case.
You know, in the old days, I'd go before investment committees and boards, and the traditional thought is when you shrink your universe, your performance suffers. Well, now there's increased reporting. As you know, ESG started in Europe as a risk management tool by the banks that weren't necessarily do-gooders. They really wanted to get a handle around risk. And I think it's very important for investors to consider that managing future risks, whether it be planetary health, human health, climate control, many of our social and governmental issues are actually correlating with stronger governance, stronger corporate returns. That's the kind of data that's coming out now and showing a correlation between higher ESG scores, better corporate performance, and therefore earnings.
Okay, so let's talk about how to build a sustainably oriented portfolio. How should investors go about that? They could look for some of the funds that are tagged as being ESG friendly, but how do you go about it?
Well, it's gotten a lot easier thanks to Morningstar. I mean, there are self-identified SRI funds, and that is grown tremendously. There are a lot of new ETF indexes that are simply screened in ETF, but you no longer have to limit yourself just to self-identified sustainable funds, because Morningstar, partnering with Sustainalytics, along with other people, actually calculate these ESG scores, environmental, social, and governance, for those of you new to this space. Environmental is pretty easy to understand. That could be things like recycling, climate, water use, natural resource use, those things. Social is more how we treat our workforce, supply chain. Governance could be things like diversity on board, CEO pay, those kinds of issues. So it's really quite effective to look at each of these three areas and measure how a company's policies are in line with the future, really, is what it amounts to.
Okay, Janet, always fascinating to hear your perspective. Thank you so much for being here.
Thank you, Christine. I could go on and on about this.
Thank you.
I really get excited when I start thinking about it.
That's good. Thanks for watching. I'm Christine Benz from Morningstar here at the Money Show.